there. So I'm back out here again, breaking down this economic theory I have with it when it comes to the Federal Reserve's monetary policy. And I was gonna just try and leave it alone, but I just keep coming across the articles. Even today, this is March. I just want to make sure that this is coming out today. Yeah, March 21st. Right. So posted 11 hours ago. Yeah. So this article is coming out of USA Today. And the title of this article, I left the link down in the description. It says, should the Fed relax its 2% inflation goal and cut interest rates? Yes, some experts say. Now, when I read through this article, I thought to myself, man, this is the exact same thing that Time magazine article was doing, as far as spreading the idea that this Federal Reserve is going for a 2% target and that they don't see anything else. I have done it time and time again on this channel where I am proving through the speeches and documents themselves coming out of the Federal Reserve how they are not going for a 2% target. That is not part of the monetary policy. Now listen to this propaganda. 2% inflation is more than just the Federal Reserve's goal, one could argue, as it works to wrestle down pandemic-related price increases that have plagued U.S. households over the past 3 years. Lately, though, the 2% feels more like the economy's go-dot, a remedy to the inflation woes that seemed tantalizingly close not long ago, but now appears further away, raising questions about whether it will arrive at all. Talking about whether or not 2% inflation will come down. Goes on like this. It's the Fed's It's the Fed's holy grail. Its lodestar. Its mantra. Talking about this 2% target. How many times? How many times? How many videos? How many times have I shown that this is not the direction that the Federal Reserve is going? Now, the problem with this is all the strategy that everybody is now taking into consideration. Listen to this. The dilemma may have significant implications for consumers, investors, and U.S. economy. Fed officials have said they won't start cutting interest rates, which would lower borrowing costs for millions of Americans, boost economic growth, and further juice a bullish stock market until inflation is moving sustainably towards the 2% target. It's not what they're doing. That is incorrect. That is absolutely incorrect thinking. The individual who now puts that into their mind, that this is what they are doing, is now incorrect. Everything that they think about the Federal Reserve from this point on will be just completely imaginary. Right? Let me see if I can find. I don't want to read the whole article because I don't want to copyright it or anything like that. Let me just show you here. Let me just bring it up here again. And now, I don't know how many times I've brought up John Williams' speech talking about monetary policy for a low neutral interest rate world. Right? But I brought it up a couple of hundred times. And in that, he was talking about how monetary policy was facing a problem of an inflation expectation that was persistently too low rather than too high. Now, this is exactly what Jerome Powell has to say. This came out in August of 2020. Let me just make sure I got that date right. It's a long speech, so it's way up here. Let me see. August 27th, 2020. Jerome Powell's speech, New Economic Challenges in the Fed's Monetary Policy Review. See, I'm really hoping that whoever wrote that USA Today article is going to watch, right? Because what they are doing is they are absolutely screwing the minds of the people out there who are reading that article right now. All right. This is what Jerome Powell had to say back in August 27th, 2020. We have also made important changes with regard to the price stability side of our mandate. Our long-run goal continues to be inflation rate of 2%. The long-run goal. Not the short-term target, long-run goal. Our statement emphasizes that our actions to achieve both sides of the dual mandate will be most effective if long-term inflation expectations remain well anchored at 2%. They got that. Inflation expectations are well anchored. They've said it many times. However, if inflation runs below 2% following economic downturns but never moves above 2%, even when the economy is strong, then over time, inflation will average less than 2%. Households and businesses will come to expect this result, meaning that inflation expectations would tend to move below our inflation goal and pull realized inflation down. Right? So this is the exact problem that John Williams was talking about just a couple of years earlier in monetary policy strategies for a low neutral interest rate world. He said that inflation expectation was running persistently too low rather than too high. So this is exactly what he was saying, what Jerome Powell was saying. Households and businesses will come to expect this result, meaning that inflation expectations would tend to move below our inflation goal and pull realized inflation down too. To prevent this outcome and adverse dynamics that could ensue, our new statement indicates that we will seek to achieve inflation that averages 2% over time. Right? Not a 2% target. No target. Right? Therefore, following periods when inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. Right? We don't know. We don't know how long. We don't know what moderately above 2% is. Is it 2.8? Hey, then we're there. We're moderately above 2%, right? Or is it 3.0? Or 3.6? Or 2.2? Nobody knows because they don't tell us what moderately above 2% is. There's no mathematical formula for this. In seeking to achieve inflation that averages 2% over time, we are not tying ourselves to a particular mathematical formula that defines the average. Thus, our approach could be viewed as a flexible form of average inflation targeting. Our decisions about appropriate monetary policy will continue to reflect a broad array of considerations and will not be dictated by any formula. Of course, if excessive inflationary pressures were to build or inflation expectations were to ratchet above levels consistent with our goal, we would not hesitate to act. Well, let's think about that. Inflationary pressures were to build moderately above 2%. I mean, what is moderately above 2%? Between 2 and 3? I mean, some people say that inflation should be 3%. Some people don't even know why there is a 2% target, right? So, inflationary pressures were to build, probably not, right? Not happening. I mean, 2.8, it's coming down. Or inflation expectations were to ratchet above levels consistent with their goal. They're not. They're well anchored right now. We would not hesitate to act. So they're not going to act. Right? Only time they're going to act is if inflationary pressures build. They're not. Right? They're moderately above 2%. Or if long-term inflation expectations ratchet above levels consistent with their goal. And that's not happening either. So, this was said 2020, August 27th of 2020. So, somebody might even argue, it's just like, well, that's not the new statement, right? Things have changed. Inflation is running rampant. Nobody thinks that that's the case, right? They're running down to this 2% target because that's what everybody is saying. Everybody in the media, everybody in the economics world, everybody is saying this exact same thing. Well, this is coming from Michelle Bowman's speech given April 5th, 2024. So literally like what, a month and a half ago, right? Michelle Bowman says in this speech titled Risk and Uncertainty in Monetary Policy, Current and Past Considerations. Now, in this speech, she says, now again, this was just said a month and a half ago. This isn't even that long ago. Another notable change to the strategy statement was the adoption of what some refer to as asymmetric flexible average inflation targeting, or temporary price level targeting. Specifically, the new statement noted that in order to anchor long-term inflation expectations at its goal of 2%, right? The long-term inflation expectation of 2%, the committee seeks to achieve inflation that averages 2% over time. And therefore judges that following periods when inflation has been running persistently below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. I don't know how many times I have to say this. I don't know how many times I have to continue to bring this up to show you guys that this is the information, the news that you can use for your own decisions to help make better position, right? Everybody else who's reading that USA Today article, which is going to be, who knows, hundreds of thousands, if not a million people will read that USA Today article, right? Or articles very similar to that. But nobody is going to be talking about the 2% average inflation rate over time, and nobody's going to be considering that for their strategy. You will be the only one. If you are watching this video, you are literally the only one who knows this stuff to this level. I cannot find anybody else who is talking about this, who has compiled all these speeches. I have more. I could keep going. Do you guys want, you want to see more? I can keep going. These are just two of them that are out there that clearly tell us that they are not going for a 2% target. They are going for a 2% average inflation rate over time, that appropriate monetary policy will likely to achieve an inflation that is above 2% for some time, moderately above 2%, whatever that means. So we understand it to at least this level. It is still very confusing. But now think about how confused everybody else is out there going, okay, 2% target, not realizing there doesn't exist. It simply is not there. The Fed doesn't see it. They aren't even considering it. They don't even know what a 2% target is, because monetary policies should be likely to achieve moderately above 2% for some time. See, this is it. This is the information, guys. This is the stuff that nobody else knows. I could go to the rebel capitalists. I doubt anybody would talk about average inflation rate. But me, I'm going to, right? When I get up there on stage, I'm going to break this stuff down. And then everybody who's going to be there is going to be considering what it is that they have to reconsider, what it is that they're thinking. And I'm not trying to be arrogant about this, but it's just driving me crazy to see these propaganda articles coming out. And I know that's exactly what it is, because by having everybody believe that they are going for a 2% target, that continues to have the inflation expectation be elevated, especially if inflation is running moderately above 2% for some time. That is totally achieving their goals. This is what John Williams was looking for. Inflation expectation that was inflation expectation that was running above 2% or above, Jesus, what am I trying to say? Inflation expectation that is persistently too high. That's what I'm trying to get at. All right, let's read some comments here. All right, UE, second. All right, you caught me as I was jumping in the shower. Now everyone knows. All right. Talking their book. Yeah, they will just threaten credibility. And that's what's funny. Here, let me go back into this article here real quick, that you bring up the credibility, because this is what's funny about just saying that okay, the dilemma may have, here we go. The dilemma may have significant implications for consumers and investors in the U.S. economy. Fed officials have said that they won't start cutting interest rates, which would lower borrowing costs for Americans, boost economic growth, and further juice the bullish stock market until inflation is moving sustainably towards 2% target. They said, and he quoted, whoever wrote this article quoted in that, until inflation, quote, is moving sustainably toward, end quote. Then he wrote the 2% target, right? He added that. That's what he added, not the Federal Reserve. The Federal Reserve never says target, right? You might hear him say it you might hear a Fed official say it in the media, right? But that's not that's not their strategy. I mean, we've already proven that with their speeches here, that they've changed the way they view it. All right. Let me see. Where was it in here? Oh, here we go. Okay, this is one of the quotes coming from this Mark Zandi, chief economist at Moody's Analytics. He says, "I don't think 2% is the right number." Goes on to say, "Don't sacrifice the economy on the altar of a 2% target." They're not. They're not, dude. They don't look at a target. They're going for moderately above 2%. Right? Here another one. Quote, the worry is you'll lose credibility. If the Fed monkeys with the target, says John Miller. Okay, yeah. Okay. Quote, the worry is you will lose credibility. End quote. If the Fed monkeys with the target, says Jonathan Miller, Barclays, senior U.S. economist. Does he not realize that they have already monkeyed with it? That back in 2020, August 27th, Jerome Powell says, hey, we're monkeying with this thing, this 2% target. We're not going to go for that anymore. We're going to go for moderately above 2% for some time with no mathematical formula to figure it out. See, I can't, again, with the frustration I hold with this stuff, because I just don't get it. Like, I just don't get how more people don't see it. That's what I'm at. I'm like, everybody seems to want to believe like this type of understanding, right? This 2% target and all that. He goes on, like, they start like even questioning it. Where did the 2% target even come from? Right? And I'm like, why even questioning it? What difference does it make at this point? Right? It's like, talking about something that doesn't even exist. It's like, here, let's talk about the psychology and break down the portfolio of the boogeyman, right? I mean, it was like, what in the world? It was like, sorry guys, I'm just like kind of going off here. All right, let me read some comments. Move markets along ladder. All right, self-education. I'm here early, right on. I'm choosing Ocho. Oh, on the dice, right on. Dishes. All right. Hey, everyone, hit the like button. Yes, please do. We got 84 people up in here with 30 likes. Let's get it up to 84 likes. Let's get 84 people watching with 84 likes. Yui is warming up for his speech. That's exactly what I'm doing. I'm going over this information over and over again. And you know what? It just makes me feel that much better to know that I'm going to be blasting out some information that most people well, I mean, I shouldn't say most people, because there's going to be a lot of UE fans there. I know there is, because there always is. But everybody else who's not following my channel is going to be blown away by the information I give. Right? I'm going to give them the 4 economic theories. I'm going to give them, the credible threat theory. But then I'm going to hit them with average inflation rate over time. And that's going to absolutely blow their minds, because they do not understand this. This is something that I had to piece together through all these speeches, through all this study of the Fed, and in trying to understand what it is that they were trying to do, considering that they knew way back in 2002 that they were going to be in this moment of the lower bound of zero, and they would have no more effective monetary policy by the adjustment of interest rates. Like, just knowing that from back then, it was just like, so 20 years ago, you knew this was going to be a problem. And then being able to see it in real time playing out, but nobody else knows it. Huh. Why? I don't get it. Like, how is it that it's not that anybody else knows, except stuff like this media propaganda that spreads it out there that has everybody convinced? I don't know what else I want to read from this thing. I mean, it's all wrong. Everything about it is wrong. Not necessarily. See, so does this mean rates stay where they are? Not necessarily. Fed Jerome Powell has said that inflation doesn't need to be at 2% for officials to start cutting rates, as long as it is moving sustainably in the right direction. If monthly price increases edge down to 0.2 in the coming months, that should be enough for the Fed to lower rates once in September, even if yearly inflation remains high. Miller says this is complete, like, how did they come up with that? It's when unemployment, they are mandated to do 2 things: low and stable prices and full employment. Right? If they have low and stable prices and full employment, why in the world would they change that? That's their mandate. That's their goal. They succeeded. Right? It's just like to think, oh no, man, they're going to be dropping it in September and all. Like, where did you get that? They aren't even going for a 2% target. So how would you come up with the idea that they're going to drop it in September? How do you know they're not achieving the moderately above 2% for some time and need to keep it there? I don't know. All right, moving on. It's a joke, scam, trusting their info, the Gestapo. No, it's not. It's not, because that is actually wrong. Unless you're talking about the USA Today, that's the propaganda. That's their monetary policy at play right now. The Federal Reserve, however they have got their communications going into the mainstream media, this article is working for the Federal Reserve's monetary policy in order to achieve their goals. What we are doing is trying to figure out that monetary policy so we can make the best decisions for ourselves. And knowing that they are going for an inflation that is moderately above 2% for some time and not this 2% target, and all the strategy that these people are putting into their investments and trying to spread throughout the rest of their communities, is wrong. They're wrong. They're like it's like being in the camp with the bear, right? Being in the camp with the bear, you don't have to be faster than the bear, you just have to be faster than everybody else. And with this information that I am telling you right now from these two speeches, and there's a lot more, right? This is just two of them. There's like all kinds of stuff that continues to add to the factual understanding of what it is that is truly happening with the monetary policy. Like, this propaganda is the monetary policy, but what it is spreading the information that gets you to believe that the inflation gives you the information that has you believe in the inflation expectation is now elevated, right? If you have that is part of the Federal Reserve's like achievement. That's what they are trying to go for. Yeah. See, let me cruise down here to the okay, 103 people, right on. We got 50 likes. Well, now we got 53 more likes to go. Thank you for hitting that like button, everybody. I'm sorry I'm so wound up on this one. I guess I just had a lot of coffee this afternoon. All right, I'm gonna be ringing my cowbell for UE at RCL. Right on, man. I can't wait. All right, they need the inflation, now they have to use it. All right, holy moly, I just got a heck of a super chat. Let's go check that out. Oh my gosh. Sup gang. Hey Big Hill. All-nighter hider. Thank you, Big Hill. All right. If there was a formula, it's going to have to include at least 30 years because at least 10 years of zero interest rates. Jill, thank you so much for this $4.99. Okay, explain to the people why the Federal Reserve needs inflation at all. Good work you do. Okay, well, I think probably the best way to understand it is that if you can imagine, I mean, there's so many different components that are going into this. But what a lot of people don't really understand or even know, and if you had followed Dr. Lacey Hunt for any length of time, this is like information that he was really good at explaining, is that the economy had a problem being as close to zero with interest rates as we were, because the return on capital investment was also going to zero, right? In fact, it was going negative. So deflationary forces were taking hold when the interest rates get close to the lower bound of zero, right? And actually the lower bound is more referred to as the Fed funds rate. But really, when interest rates are very, very low, the return on capital investment becomes low as well. And that return on capital investment, if it goes negative, then that has the deflationary forces that begin to impact the economy. And this was one of the problems that they were facing, is that without an inflationary force, I guess the idea behind it is without the inflationary force, they would have trouble finding the growth that they would need. So if you could imagine, like, again, I'm trying to like simplify this as much as I can, because it's like the whole scheme of it is trying to understand why it is that the Federal Reserve would want inflation and not deflation. But ultimately, like, if you can imagine all your town has like plumbers, right? They have all the plumbers they need, but you just yourself have moved into the plumbing trade. You come in, but you realize that the market is saturated with plumbers. They don't need any more plumbers going in there. What they need is more construction, more houses, more new, buildings for there to be more demand for plumbers in that particular area. You would need that growth to take place. Does that kind of make sense? All right, so that was like, if you can imagine like growth being like the issue that they would need to have on a continuous basis. And you're not going to really find growth if you have a deflationary aspect of things. So they don't want growth going so fast that it just like overwhelms people, and then inflation like consumes, overwhelms them to the point that they can't live. So 2% or a low inflation, 0 to 2 would be just fine, right? If they can maintain it there. Obviously, they know that 2% is just a target. There's no way they can achieve it. They probably knew it back then. But since they needed something to go for, 2% was it. And, having this 2% was going to have like this stable growth over time. Okay. So that's why they would want inflation. Now, deflation is a major problem for the Federal Reserve, because what it ends up doing is creating pretty much a doom cycle, right? So if you have the belief that there is going to be, again, I'm trying to keep this super simple. If you have the belief that there is going to be lower prices in the future, like you're going to go buy a barbecue and you're like, man, these barbecues are $500, but last year they were $550. I wonder what they're going to be here in a few months. And then, a few months go by and you see that they're at $475, right? And you're thinking, man, these things are just getting cheaper and cheaper. How likely are you going to go out there and buy that barbecue when you're watching the prices fall, right? Well, that's the problem. The reason why the prices are falling is because nobody's buying barbecues, and because nobody's buying barbecues is because they're watching the prices fall. So all of a sudden, everybody's pulling back on all their purchases. Like, they don't want to participate in a falling price environment, especially when you have the idea that you could get it for a better price down the road. Now, take that up into like the housing market, right? You're watching housing prices fall. Now, all of a sudden, you're sitting in a house that you're paying, making payments on, locked in for 30 years, but yet you're watching the house's prices fall. How likely are you going to be in an environment to be eager to go and buy a house if you're watching them continuously fall? And then, on top of it, if you're sitting in a house that now is expensive, how likely are you going to end up being defaulting on that thing just to get out of the whole thing altogether, right? So this is the problems that ended up facing when you have like a deflationary scenario. If you are a saver, right? If you are a producer saver, a deflationary scenario is awesome, right? Because you got all the money and you watching things go on sale and you're watching things, become better, more affordable. Then you're sitting in a position that's actually benefiting you. So a deflationary scenario for the person who's sitting in the right position is just great, right? It's just fine. And now, when you think about the economy, you have to think about it for yourself. Like, this is my economy, not everybody else's. Like, I don't make decisions for everybody else. I make decisions for me, right? And so I have to make the decisions for me based on what it is that I understand and what I know about the economy. And if I happen to be in a position in which that I am buying up assets because everybody else is crying in the street from devastation, it's an unfortunate consequence for them and a benefit for me for knowing and understanding what position I should be holding, right? There's no fault here. There is just simple survival of the fittest. And this is why I keep coming out and saying it's an average inflation rate over time and not a 2% target, because all these people have the wrong strategy. Every last one of them. And almost everybody does, right? But that is the Fed's strategy, is to make sure that everybody is believing that way so they can continue on with their monetary policy, which is their words of how it is that they are going to be messing with the Fed funds rates. Not the actual messing with Fed funds rates, but the talking about it, right? That'll do it. And people who have been following me really understand it. Everybody else who's watching this video for the first time is like going, who is this lunatic and what is he talking about, right? But everybody else is like, yep, dude, you keep repeating yourself. We got it, right? Makes it better for savers and gets rid of zombie corpse. Yep, absolutely it does. More efficiency means lower prices for the same thing every year, you would think. Look at Japan for deflation example. Yeah. Not if they want to stay employed. That's right. I thought they had stagflation. Not deflationary. How about stable? Well, Jill, that's a great one, because a lot of people say, well, just how about just stability? Well, that would be the 2% target, right? And they can't do it. They just simply can't. It's just like, it's not achievable. Um, it's like, why can't they keep the boats from going up and down in the river? It's like, well, because there's a tide, right? And you can't stop the tides. You can do things, you can try, you can build like levees and locks and, seclusions and stuff like that to attempt to control how the tide is affecting the docks and the boats and everything else. But it doesn't take away from the fact that the natural forces that are out there are still conducting themselves the same way, even though you've manipulated a particular area of it, right? So same thing. Like the Fed they tried to go for a 2% target since 2012, and they failed miserably. They couldn't do it, like, at all. And so that would be their attempt to go for stability. It's not like it's not capable. It's not possible to create a situation in which that it's going to be stable, because people, do you want to stay in the same, like, I drive this 99 Ford Explorer and I really like it, right? But I really, really would rather be driving the Camaro, right? But I don't want to pay for the Camaro yet because it's too expensive, right? So I'm looking for the deflationary scenario in the Camaro. However, if I had the money right now, I'd probably buy the Camaro, right? If I had it like straight up, I had, $1 million or whatever, and I was, cool with just going out there and dumping a bunch of money on a brand new car, I would probably be buying the Camaro, right? I mean, because that's just what you do if you have $1 million, right? You go and buy a nice car. That is the problem right there, right? So that's not stable. This is stable. Driving this car is stable. Taking my money that I earned, the extra money, whatever the hell extra money means, right? Taking the extra money and investing that back into some other part of the economy that's going to be growth and stimulating to jobs or something of that nature, right? That would be the appropriate thing to do, but I have to make that decision. I can't let the government do that because they suck at it, right? Fed sucks at it. They don't make decisions like that. We make decisions like, man, when do I finally get to buy the Camaro? And that's the problem, right? That move into luxuries is the problem and creates the instability. It's what drives out the domestic manufacturing and drives in foreign production. I mean, and this is something that will occur time and time again. And I mean, I would love to come up with an idea and a strategy and a concept that would fix that, but there's none to be had. Like, I mean, I used to believe that there was a way of doing this when I was really into politics and understanding how it is that laws are done and conducted and, whatever. I thought that there was a way. I really did. I thought, man, if more people thought this particular way, then it would be better, right? Here's the problem. Nobody's going to ever think like me. Ever, right? Nobody thinks like me. Nobody's ever going to think like you. Nobody's ever going to think like them, right? And nobody's ever going to come up with an idea that says, hey, man, I got this idea that everybody's going to like, right? It just doesn't happen. So understanding that as well, right? There's no fixing it. It's just not going to be fixed. You have to understand what it is. You have to understand it like the weather. It's raining today. If it was raining today, would you put a raincoat on? Would you grab an umbrella? Or would you just deal with it? Like, I mean, I got this hoodie. I'll put the hoodie up because that's what Oregonians do. We don't actually have, umbrellas and stuff like that. If we have rain gear, it's because we're actually at work, right? But nobody in Oregon has rain umbrellas or rain gear. We deal with the situation at hand as it is because the rain's not that big of a deal. Everybody else has to have tools, right? Because they don't conduct themselves the same way. Right? Same thing. It's the exact same thing. I'm going to invest so much when the stock and real estate market falls. Everyone watch this channel for the last 3-4 years. What? Who in the world said that? All right, City Star Productions, thank you so much for the $4.99. It's hard for me to listen to other networks and channels after listening to you. You bring hard facts straight from the Fed. Nobody else can beat that. Thank you. Thank you, City Star Productions. When you finally do hear people talking about this information and it gets out there and it becomes common knowledge, because it eventually will, right? You're going to know that you heard it here first. right? And I'm going to have all these videos talking about it way ahead of time. That's one of the reasons, like, people told me to get off of lumber because I was just going off and on and on and on about lumber, but I could see it at the time. I was reading these articles going, okay, guys, they're lying. They got it wrong. They're misinformed. It's misguiding. It's propaganda, right? And, you know, here it is. I'm seeing it again. That's why I'm so adamant about it. All right, this process does tend to clear out the bad players like Zombie Corpse. All right, mandates are mandatory. Oh, okay. Digital currencies like certain cryptos, not Bitcoin, narratives like XRP, HBAR. Do you know about these things that settle payment instantly? Yeah, of course I do. But here's the thing. It doesn't really matter if it settles the payment instantly, right? Even if it is just like, no, but it happens like, right? I don't care. It doesn't matter. That doesn't change anything about how the fiat currency, how hard currencies, how Cantillon effect, how Gresham's law, how Triffin's dilemma, how all these things work. Like, it doesn't change any of that stuff. Okay, so I don't care if it's gold. I don't care if it's Bitcoin. I don't care if it's XRP. I don't care if it's stablecoin. I don't care if it's a fiat dollar, right? It doesn't matter, right? To me, it doesn't matter any of those things. Understanding how it is that these world currency, the world reserve currency, gets into the position that it does, what it would take to knock it out of that position, what it would take from a foreign entity to produce a currency that is going to compete against the current one that's already in existence, right? And even if you use some sort of other form of payment, again, XRP, Bitcoin, stable coins, I don't care, FedNow, right? The economic forces that are at play will continue to go the same way. There is no difference to it. Okay? Understanding it for what it is the important part. So I don't care. You can go ahead and go to XRP. It's not going to change my strategies or the way I do anything, right? Because I understand how the economic forces work. And this is where, like, a lot of people are misunderstanding of like, especially when it comes to like fixed currencies or hard currencies like gold or Bitcoin, right? This is probably one of the most devastating things that could ever possibly happen to an economy if it is doing really, really well. And that is the weirdest thing for a lot of people to think about, right? Because that moment that a country is doing, an economy is doing really, really well, and they are sucking in all the gold from all over the world as they produce the world's best products, they are going to find the people moving into luxuries. And once they move into luxuries, they will start creating the inevitable collapse, which is pushing the domestic manufacturers out and the foreign production competition in. And that'll happen no matter what. I don't care what currency you use. I don't care who's in charge of it, right? That same thing was going to happen time and time again. Now, you can delay that by switching off a gold standard and moving over to a fiat standard, and then issuing out a lot of debt, and then be the only issuer of that much safe, reliable, highly in-demand debt, right? And then you can continue on with bringing in the new money into the system, but you have another problem you have to face, and that's the separation between the rich and the poor. And now you have a bunch of people going, what is it that we need the politicians to do in order to make houses affordable for people? Well, you know what the problem is that the new money has poured in for so long and driven such a wedge between the rich and the poor that there is no chance anymore. You can't go to work a 9-to-5 job, expect to get married, have kids, and buy a house all on that single income. You and your wife ain't going to do it. You and your wife and your side hustles are going to have to do it. And you're lucky if you even get a break from that. Okay? This is the new way. And if you're not getting into it, then you're going to get left behind. And this is the sad state of the economy, right? Of the general economy out there. But once you get it, it's not a big deal. Now you understand the facts. You understand what it is that you have to do. You have to know that I am not here to try and get everybody else to get on board with what I need. I need to go out there and just hustle for myself. And that's all I'm going to do. And everybody else is going to have to suffer the consequences of thinking that the Federal Reserve is going for a 2% target. just going off today, aren't I? All right. BDL, thank you so much for the $5. CPI year over year peaked in June 2020. And then June 23, it went 3%. Seems it could set up June 24 to be lower year over year, reading by the stats. Yeah, I mean, and I wouldn't be surprised if it does bounce around. Like, I actually predicted this would be coming from the Federal Reserve. Are we going to cut? Are we not going to cut? Is it inflation here? Are we not inflation? Are we beating it? Are we not beating it? You know, keeping the markets confused was part of the strategy, right? I mean, this is something that I tried to get people to understand 6, 7, 8 months ago, probably even longer ago, to try and say, okay, this is what the Fed's about ready to do. Look for this confusion into the markets to make sure that they can keep that open-ended, you know, decision-making out there. So long as nobody knows exactly what it is that's going on, they can use the media, they can use their statements to then guide the markets in the direction in which that they feel they need. You need to cut back on, you know, inflation's running persistent. Okay, well, just let them know that we're not cutting rates, yeah? Go out there, hey, all you governors, go out there and tell them, give them your opinion about how you're not going to be cutting rates. So you're not going to vote for that, okay? Put it all over the news. It's, you know, get it all spread around so everybody knows. And this is like, this is how they do it, you know? All right. That sums up investments. Laugh out loud, you never know. All right, Simon, what if I told you the numbers weren't actually real? Well, Benny, I did a video on that. Right? It's called FASB 56. The numbers aren't real, right? FASAB 56, right? I forget what it stands for. Federal Accounting Standards, something or other. I can't remember. Anyway, I did a video, just go and research back. It was one of the earlier days. I think I did it in the first couple of years I was making videos. But just type in, I mean, in fact, just Google search it in YouTube, and you'll probably find my video as one of the few that actually covered it, right? FASAB 56. The government has already come out and stated that the numbers that you see are all fake. Every one of them. They're good enough for you to use for investment, for your retirement portfolios, for your business decisions, but they are not the real numbers. The real numbers are hidden for national security reasons. And now they say some numbers are really, like they have, you know, particular ones, but there is nothing out of the realms of possibility when it comes to these particular numbers. So I already don't care. Like, I don't care, right? Like what the numbers are. I quit looking at CPI, I quit looking at all that stuff as far as where the numbers are. I don't compare them to the past. I don't do any of that stuff. What I look at is the direction that they are going and by how much, right? To me, that is more important. Are they going up by a lot or a little, right? Because these numbers are all fake. It's all fakery, right? And it's all done for national security reasons, and they have already confessed that to us, right? But nobody really talks about it, right? I mean, have you noticed that I don't really talk a lot about the numbers? Like, I don't bring up numbers like everybody else, stats and graphs and all kinds of stuff. I talk about the Fed funds, I talk about inflation rate, but I don't really talk, you know, much else. Maybe mortgage rates. That's it. Like, I don't go into all these other numbers because it doesn't matter. They're not real, right? So, I mean, if you state a number, it's might as well be just stating, like, you can, is it 6 or 7 or 12? It doesn't, what difference does it make, you know? Alright. So that's my answer to that, Benny. Angry capitalist. That's me. I'm the angry capitalist today. Alright, thank you so much for the $2. The mainstream just espouses monetary addict talk. Yeah, you know, and I think that's I don't know, like, I know I like to hear myself talk, but sometimes I think these people like to kind of spread their own ideas of their genius, but then when I look at it, I think, man, this is such ignorance. Like, I don't know how it is that somebody could get to the level that they are and not understand what it is that I know. Like, how can that happen? Like, I don't understand how that happens. You know? It doesn't seem right. Move everyone into producing necessities so we can expand into luxury economy. Well, that sounds great, Jesus, but the problem with that is that nobody wants to move into producing necessities because they're so much cheaply made someplace else. right? See, like, I mean, that's the reason. Like, if it was, you can't change it. Like, here, yeah, you can. Yeah, actually, I'm wrong. Here's what you do. You abolish a minimum wage. Okay? You abolish minimum wage, and you let anybody work for whatever wage they want, right? Or whatever wage they could compete for. If you were to do something of that nature, then you could bring production back to this nation and produce all kinds of wonderful stuff, so long as you can pay anybody whatever wage they want, right? And then I think that you could probably do something as far as bringing back jobs to this country. Right? Now, whether they're not going to pay a living wage, I don't know about that, because that's not part of the, abolishment of minimum wage. But you can definitely bring all the jobs back to America. Everybody would be able to work. Every single person. So that's how you do it. Okay? And then, whatever luxuries they can afford with their, $2 an hour or whatever they can buy as many as they want. You can buy as many luxuries at $2 an hour as you want. There won't be any consequences from that. So I mean, again, guys, I don't want to be considered a defeatist, but I have looked at this from a lot of angles. Believe me. I mean, as somebody who was dirt poor, broke, living paycheck to paycheck and didn't have a car to get to work with, I thought about this. Like, I am not somebody who was born with some silver spoon in my mouth or even has money right now. Like, I work hard for my money. I have to do this all the time, right? Constantly, hustling, trying to figure it all out, because I'm just in the same boat as everybody else is. Okay? Now, I would love for there to be a fix for it. I would love for there to be an answer. I would love for us to say, hey, man, we can do it like this. It isn't happening. It's just... I don't even think about it anymore, because I've already stressed myself enough trying to figure out how it is that people can, how we can have a society in which everybody can make it in. It doesn't work like that. It just simply doesn't work like that. There can be a brief moment in time in which that it does, right? Where you go from being this infancy nothing nation to being high quality, hard-working, industrious people who are producing and saving and driving, this industrial revolution and getting people into like a better life and a better standard of living and a better, awesomeness for their country. And they get to a point that it peaks, and that's it. And then it's no more. That's it. That was the best. That's the best as is going to be, right? And then after that, it's going to be separation between the rich and the poor, and everybody has a harder life. Or not everybody, but a bunch of people have a harder life, and other people have an extremely great life. Well, great by, matter of opinion. All right. And you haven't even been divorced, fleeced? It's a matter of time. They constantly kick the can down the road. Exactly, Steve. Some folks need to learn symbolism. Mark your forehead may just be symbolic. Mark on your forehead. All right, China's factory wages are about $5 an hour. If they allowed minimum wage to be at 8, factories would provide basic studios for employees. If they allowed minimum wage to be $8 factories would provide basic studios for employees. China right now is losing a lot of their manufacturing because they have risen their standard of living. You know that, right? Like, you can find the articles talking about it. They're going to Vietnam, Malaysia, Mexico. They're going to other places. Places that they can get closer to the United States or find cheaper labor and energy costs. RFK Jr. will shake it up. Well, good luck. I don't want to, knock it down or anything like that, but I just lost all faith for politicians whatsoever. If there's, I kind of look at, politicians like I look at Social Security, It's just, I have to deal with it. I have to contribute to this thing. It's not my choice. I have a W-2, so they just take it from me, right? And I'm not expecting anything from it. Definitely anything positive. I don't have any expectations or wants or desires coming from Social Security. And then at the end of the day, here for politicians at the end of the day, or at the end, towards the end of my life, If it happens to be there and they've done good, great, awesome, man, you guys did wonderful. But I have very little hope or expectations of any of that. All right. So, I mean, if RFK can do it, cool. Let's see here. So when a group that shares the same spirit. Life is too short, Simon. Enjoy some of your earnings. One day you'll regret it. But I understand, given your background, your reservations on enjoying such things. Yeah, Benny, I do. And I'm getting over it, man. I know it's a mental block. I know it was from from the times that I had where I was like, stressed out, sitting at the end of my bed, trying to figure out how it is that I was going to make ends meet for the next day, 2 days, next week, whatever it was. I mean, there was a time in my life that, like, I didn't look to, like, some people have this ambition to have, like, hundreds of millions of dollars and fly on private jets and go all over the world and do all kinds of stuff. Like, don't get me wrong, I would like to travel. I think that would be fun. And I would like to do some things that would probably involve a lot more money than I'm making now. But for the most part, I didn't have any of those dreams. My only dream was to be able to pay my bills. That's it. Like, if I could just pay a bill without stressing about it at will, just like, oh, what bill we got? No problem. There you go. Right? That was my dream. That was it. That's the only thing I wanted. Right? It was to be able to have that in my life and not stress about having a car or anything like that. Right? So, like, I succeed at goals easy because I guess I just don't set them that high, I mean, it was just like I shoot for high, for big things, but I don't really expect much out of any of it. And I guess that's probably why I do all right. I'm just saying divorce makes it even harder. Divorce does make it harder. I mean, I don't want to sit here and just brag my woman up, but I got probably the best woman that I could ever possibly have asked for. I think learning how to build a house is better than having a house. Yeah, I agree. If you had one of those two things, either the ability to have a house or the ability to build a house, I would probably go with the ability to build a house too. Right? Unless it's just like, I mean, it would have to be a really good house in a good position or whatever, because in my opinion, I could build, even still right now, I could build, many houses throughout the rest of my lifetime, right? So I could have many houses if I wanted. Better night drive, a bright night drive. There we go. $4.99. Thank you so much. We need a better president to lower these rates. F Trump, F Biden, F Obama, F George Washington. Wow. No, you don't need a president because the president isn't going to do it for you, man. I'm sorry, right? But never is there a president out there who's going to make anything happen with the Federal Reserve to lower rates. It's not going to work. All right? Jerome Powell was hired by Trump. Trump says, I want to fire Jerome Powell. Jerome Powell should be lowering interest rates, going into negative interest rates, and printing money. He pretty much yelled at Powell with frightening, angry voice, right? And I don't think exactly Powell is Biden's friend right now. Like, I mean, if there was lowering interest rates was going to be good for the economy, then I would imagine that's what they would do if they were going to be like friends of Biden, right? And even if they were to lower interest rates right now, that would be more of a benefit for whoever the next president is, or the next administration, or after the election, not for the election. So, in my opinion, right now, the Federal Reserve can do nothing to try and benefit the president. And the president doesn't do anything to try and conduct what the Fed funds rate is. Like, they scream and yell and bitch and complain about it, but there's nothing they can do. All right, thank you so much. Mandates are mandatory. That's Australia, huh? You're from Australia, if I remember right. Bro, keeps these talks up. You are a guru for everyone wanting to study this stuff. The way you speak and see the world is clear cut and straight to it. That's how it should be. Keep the hustle. Keep up the hustle. Thank you Thank you very much, man. You know, I'm not somebody. I'm not somebody who's gonna be like. I mean, I'm somebody who's like who calls out shit right away. Like, I mean, I'll see somebody like pulling it off or something like that, and if it's not that important to me, I won't say anything. But if somebody is just like, if they're kidding themselves, if they're trying to kid the room, if they're like whatever, I'll be like, bro, come on, right? Let's, we all know that you're trying to like, it's just like, just come straight forward up with it, right? Like, that's the way I am, and some people get kind of mad at me for that, but I'm not going to let it just slide, It's just like, I'm not going to. If you say something and I know the truth is something different, then that's what's going to end up having to come out of your mouth again later on down the road. You're not going to be able to change it. You're not going to be able to, well, let me tell you what I really meant by that. No, I know what you meant, I know what you meant then. I know what you mean now. Right? And that's just how I am. Like, I mean, I don't know what else to say. I mean, I remember these things. It's like little videotapes that play in my head, right? And all of a sudden, somebody will say something 2 years down the road, and I'll be like, wait a minute, man. No, remember when we were driving through the car, and we were, doing the thing, heading off to whatever, you said this, And, like, I will, like, that's how I roll sometimes, and people get kind of mad. All right. Angry Capitalist, thank you so much for the $5. Don't rely on others to fix the world. Focus on positioning. That's right. Can we talk about the implications of the Fed's policy going forward and how to maneuver? Well, that's just the thing. Like, what I have to think about now is like, what would I do if I believed that there was a 2% target and that the Federal Reserve is attempting to achieve that? Like, how is it that I would be positioning myself, thinking about positioning myself, the businesses that I would start, knowing that's not right? Like, this is hard to do. This is where you have to be like an empath, right? You have to go and like literally disconnect yourself from your positions, your knowledge, everything that you know, and you put yourself in another person's position. And you try to think like them, you try to understand things like them, you try to put yourself in their understanding, which is very difficult to do. Like, I mean, it is. It's like, it's not easy because you have to sit there and pretend. You have to imagine and like, and think like some ridiculous thoughts sometimes in order to achieve this level of understanding. But that's what you have to do, right? But if you can do that, then you will know how other people are positioning themselves, and you'll know that that's incorrect. So like if you saw somebody doing something incorrect, and you were over there, you were like, man, you're doing this incorrect. And they're like, no, I'm doing this exactly right. Look at all these other people who are doing it. And you're like, no, I got the information that is telling me you're doing something that's incorrect. At least you're not doing that, right? See, this is how this information works. Is that how come you're making that decision? You ask that person. It's like, well, because they're going for a 2% target or whatever reason they give. And then you try to explain to them how it's something different. And if they're like looking at you like, what? Then you know that they don't have the information, that the strategy is incorrect, that whatever it is that they're doing is lunatic, right? It's lunacy. It's just like you're crazy, right? Because you're completely imagining things. And so that's how you do this. And now what it is that you have to do for the actual decision, like somebody comes to me and says, like, dude, I got $10,000. What do I do? And I don't know. Figure it out, man. Like, I don't know what I'm trying to figure out what I'm supposed to do with it. I got stocks, I got bonds, I got gold, I got Bitcoin, I'm buying into real estate, I'm saving cash. I don't know what you're supposed to do. Like, I don't know, pick one of those things. I don't know, pick all of them. It's just like, there's nothing I can do to possibly do a video that's going to explain what it is that, like the all-purpose way of going about it, right? It doesn't work like that. You have to know what it is that you're going to do, and learning, like, how to position yourself is the best to go. Like if I lived by myself, I would literally live in a van down by the river. I would not be putting my money towards any real estate, rent, anything like that. I would be stacking cash and working hard and filling that up and buying into, dividend paying assets or teaming up with people on rental. I would do real estate on teaming up with other people on rental, but I would make myself as nimble as possible and with as much income as I could possibly get with as little expense as I could get out. And that's the way I would live, right? Most people have these ambitions of toys and stuff. Like, I have none of that. I would like to have a nice collection of tools if I had anything. Yeah, that's it. Like, you know. Moving on. All right, $1.99. Holy macaroni. This is outrageous. Which part, man? Thank you for the $1.99 too. All right, the political followers' minds blow. Watching UE. Blown, watching. Oh, blowing, watching. All right, consumers gonna consume. Do the dice add horsepower to the car? Damn right. Each one of those adds 5 horsepower. Joshua B, it would be fantastic for lower 50%, but people would whine as stocks would go down big time and houses down too. Yeah. Like, I forget how many, like, millionaires there are in this country, and, like, 90% of them are real estate millionaires. Essentially because their house became worth that much more, you know? What is not a Ponzi at this point? Not sure. Maybe gold. I mean, everybody calls Bitcoin a Ponzi. I don't think it's a Ponzi. I don't think Bitcoin's a Ponzi, and I don't think gold's a Ponzi. Right? Like, Bitcoin would be a Ponzi if the purchasing, like, I can understand, like, those who produce the most of it and selling it off, like, that kind of pyramid kind of thing kind of going. I can understand it from that logic. So, but once it's spread out there and starts spreading it around, it's not like the Ponzi scheme of, like, trying to get new people in to funnel money to the top. This is like coins being spread around and filtering down. So the more that get filtered right from the top, and I can understand, like, that kind of concept being a pyramid, but it eventually would deplete and the pyramid would be empty, right? It would be all done. The top would crumble, and then all the Bitcoins would be out there again, right? So it's only for a time that it's a pyramid scheme, not a continuous pyramid scheme where new money comes in and continuously flows to the top. Coins have to enter the system. Maneuvering my perception versus taking the perceptive of the masses or your customer. Cruise down here. Simon lives by the river. Yeah, I live right on the Columbia River. If it wasn't for the houses here, I'd be able to see it. Yeah. House Rich. Super chats equals UE buying more silver. It's going to 45 for the 3rd time. Yeah, thanks, man. I was like, I was even, like, you know, showing some people some silver today because somebody was talking about it. So just to show you, I do carry these pieces with me, right? Just about everywhere I go. I carry this. This is the sterling silver. I've shown these before. Right? This is a sterling silver bar. It's the only thing that I have that's weighed out in grains, which I thought was pretty cool. So, and it's the only, like, sterling piece I have. And then this one was pretty cool. My buddy had sent me this one. You see, I got it up right. Yeah, it's like, it's got this really crazy image going on it. You see the skull and the overflowing cup and all this symbolism going on it. It's pretty cool. So yeah, I carry those around with me. Silver a Ponzi. Leave this channel, dude. Huh? Who said the silver's a Ponzi? Alright. The rain is relaxing. Yeah, stay curious. I enjoy the videos where it is raining. I like it when it's raining kind of hard too. So that makes a lot of sound. I'm gonna live by a river. I'm gonna buy land along the river, but then there's mosquitoes. Yeah, there's a lot of mosquitoes. It's bad. Glad I bought more silver last month before the price rises. Yeah, good for you, man. All Nighter says, Reinhardt, the Fed is a PMA private membership association, but that's the same structure we can utilize if we have the knowledge. Yeah, see, All Nighter's like, he's got an understanding of, like, the powers that we have as an individual, that we can take our freedom from the government. Like a lot of times we don't even understand that we walk ourselves right in to giving up a lot of our freedoms and sovereignties, not even understanding that we're doing it. We just think it's like the way it is, like the rules or something like that, or the law. But understanding it from, I wouldn't even necessarily call it like the sovereign citizen's point of view, but more of just like a constitutional freedom loving individual American, right? Understanding it from that kind of point of view means that you are a higher authority than the government, and you can hold them under your authority, right? Like, you don't have to stand under their authority. In fact, it's not meant to be that way. It's meant to be the other way around. And trying to take in that understanding and that kind of knowledge of things is really deep and really, difficult, man. You think economics is tough? Try understanding Constitution and being a constitutional American. That's hard, right? And that takes work, and that takes like dedication. And the only time that it is ever going to, and the only time it's ever going to be protected is when you are doing that. Like, you have to protect it. There's nobody else out there who can do it. There's no little green guy who's going to jump out of the woodwork and saying, hey, wait a minute, I think your constitutional rights are at question right now. Like, you have to know what they are, or else you don't have them. They just don't exist, right? That's just very much like, monetary policy for most people being an, average inflation rate. They don't even understand what sovereign citizen means and don't understand what freedom is. If you don't change your car oil, you aren't ready to change the world. That's so funny. Let me tell you about an old Ford Ranger that I had, and I don't recommend this for anybody, but it had a really, really slow leak to it in the oil. Right? So like maybe every 2 months, every 3 months, I would have to add a quart to it. And outside of changing the filter, I never changed the oil on that truck, and I drove it for over 300,000 miles. On the original clutch, too, right? That was, like, pretty impressive. So, yeah, 300,000 miles on that 95 Ford Ranger. I bought it when I had 56,000 miles on it, and I drove it well over 300,000. And when I did sell it, it wasn't the clutch that had gone out. It was something else. It was, like, the internal slave cylinder or something that had gone out in it. Anyhow, when the kid dropped the tranny to go work on it, thinking that it was the clutch that needed to be replaced, he actually said there was still plenty of clutch on it. So, anyhow, that was my experience with that Ford Ranger, but I don't recommend it. But yeah, I just add a quart to it every so often, and like literally never changed it, and drove it for 300,000 miles. That's crazy. Yeah, bad idea. Cruising down here. I hope not. I need to buy more silver. Keep it steady. 100. Yeah, Matt, I would like to be buying more silver too, but I don't think your opportunity to buy silver, at least down in the 20s, is going to come anytime soon. You might get it into the high 20s or something like that. But I really honestly think for the next probably at least, it's hard to like pinpoint where and when in the economy you're going to start seeing things shift. But right now, the belief of where it is that people should go with their money is very like fearful. Like, nobody knows where the hell they want to go. They like stock market's all-time highs when everybody's talking recession, but yet it still goes up. Do you really want to put your money in the stocks? Housing? Where do you want to go? Dollar is like, people are talking about inflation again. It really doesn't leave a lot of places except for precious metals like gold, and typically it would be gold. Now gold is getting that move. It's up to what, $2,400 an ounce, and silver's starting to get noticed. The thing with silver is usually the late, much more volatile, higher running metal when it's compared to gold. So gold will steadily move up, and then all of a sudden silver will just take off like a rocket ship, right? So how far out and how far along the timeline that is, it's going to be very difficult to understand or know until we actually start seeing the Federal Reserve moving those interest rates, because I think that's going to actually be very telling of what it is that's going to be a recessionary thing or something like that happening within the economy. And then that'll either increase or decrease that pressure within the risk taking. Again, that's really, I know that's very obscure to say it like that, but really, precious metals do their best run at the end of a recession, right? Like, you think about it, last time silver ran up was 2011, right? The recession was 2007-8, the great financial crisis. So it was really like after the recession, just before the run, the next bull run that started to take place, that people were very like, what the hell is going on here? And they started moving into that gold and silver position. I'll take a 1-acre homestead with some Second Amendment before any money. I like that. My girlfriend has 25 acres. Land is a pain in the butt. It is. All right? Land is something you have to be dedicated to. I'm convinced that Bitcoin is the actual gold price and Ethereum is the actual silver price. All right. Accelerate. The Fed's got tools. It's not what you have, it's what you know. Douglas says, interesting at Steve. I could see that being the case. What did Steve say? Oh, the Bitcoin is the gold price. Dang, stay curious. Crypto sucks if you sell. Simon, what's your take on reality? Is it a grand illusion? Are you you're talking like deep stuff, right? Expanding consciousness and stuff. Is reality okay? Is reality a grand illusion? It's kinda. Like, I was able to manifest stuff into my realities that I didn't think would ever take place. Right? Like, even the idea that I'm sitting here on this YouTube channel talking to 110, 103 people, talking is something that I never would have figured I would have had in my life. Like, if you would have asked me at 40 years old, what is it going to be like in your life in 10 years, right? I'd never thought that I would be doing things like this. Not ever. Right? Now, there was a time in my life, and it was a long time ago, before I had YouTube, before any of that stuff, that I said, I would like to be on stage. I like entertaining. Like, I do bingo calling on the weekends, and I did a play a few years ago that I just absolutely loved. It was a very intense, deep play with a lot of lines, and so it was a lot of fun doing that. And so I really enjoy entertaining. And so to me, like, being up on stage, giving like my opinions, my ideas, my thoughts about some of the things that I am seeing within the economy was something that I just thought, like, and I didn't know it would be the economy back then. I just thought, like, my ideas about, whatever, the world politics or whatever was going on at the time. I just thought then, man, that would be so cool to be able to be on stage. Like, I just think that would just be the neatest thing in the world, to be able to do something like that on a serious fashion. And I was a huge fan of Ron Paul at the time. And I followed Ron Paul and really was hoping that he would get into, be able to be president, and we would, audit the Fed and do all that other stuff. I was really excited about that because I had just read The Creature from Jekyll Island. Right? So here I was like pumped up. I thought, G. Edward Griffin, Ron Paul, being able to speak on stage, I thought those would just be the coolest things in the world. Right? Well, years and years and years and years and years and years gone by, and one day George Gammon, he invites me to go speak on stage at the Rebel Capitalist. This is the first speaking engagement. Like, I've done YouTube now by that point, but I had never been on stage to give my opinion about something, right? Like, I mean, this is brand new. And I'm going to the Rebel Capitalist. I'm going to go speak on stage to the same audience as Ron Paul's going to. Like, holy moly, right? Now, talk about a dream, right? Now, I didn't actually get to meet Ron Paul. He was kind of surrounded by security and just kind of off to the side there. But I got to speak on the same stage to the same audience, right? The same day. That's pretty damn cool, right? That's pretty close to achieving the goal of actually meeting the dude. I'm just going to consider that a win. And then just a few months ago, 6 months ago or whatever it was, I'm down in Vegas and I'm having lunch with G. Edward Griffin, the author of The Creature from Jekyll Island. Like, I'm going to be on stage speaking to the same audience as G. Edward Griffin is. Now, holy crap. Talk about bringing this into my realities. Like, there was a time in my life that I actually said to myself, man, that would be cool to do. This is before, like, before the foreclosure of the house, become, like, super drunk, all the other stuff, like, all the bad things happened, happened to me after. Like, I thought, like, it would be cool to be on stage and meeting these two guys. Now, well, for whatever reason, maybe that's what I needed to go through, was the foreclosure and the devastation and all that other stuff to, start buckling down to figure out what it is that I needed to do with my life, that actually started guiding me towards the ability to actually meet these two guys and to be on stage and to have this YouTube channel and all this other stuff. Right? How did that happen? Like, I said it a long time ago. And then it finally came to being. Like, I didn't even try to do it. Like, I didn't say, I'm going to go down, I'm going to take step one to get there. I didn't do that. I didn't even have a step one to get on stage. I didn't ask for it. It was offered to me. But somehow, in my mind, and the subconscious, and my interactions with the universe, and the rest of the people out there, it knew. It knew the things that needed to happen in order to get me on stage, to meet those people. All right? Subconscious, it was at work. It was doing the things that needed to be done. I didn't know, I wasn't trying to do that, right? Not consciously. But all the subconscious was hard at work making that happen. Dealing with the universe out there and doing all the little things and all the little communications and all the things that had to happen in order to bring it into existence. Right? It's not that difficult to understand. But that's how it went down. That's how it went down for me. It's how I do everything in my life now. Yeah. I watched a guy one time. He would be able to get anything. He picked up his phone one time and he was just like, dude, have you ever seen one of these? He held up his cell phone. He says, you can get anything you want with one of these, right? And, and I laughed at that. And I'm like, dude, how do you just say that? Like, how do you go and do it? But then I realized, no, that's exactly right. And I told him one day, because I said to him, I said, I learned more about manifesting my realities watching you, right? Watching my buddy and him just at his, kitchen island, going to town on a cell phone, making deals with people and stuff like that. I said, I learned more about manifesting my realities watching you push your way through so much stuff. Like, he would be kind of almost a brute. Like, I guess that would be a way to put it. And, push your way through and just get whatever it is you wanted from this universe. He goes, yeah, but you have to deal with the consequences from it. And I was just like, what consequences? Why? I mean, I understand he dealt with them because he would be, he would have a lot of people angry with him at times. And I'm thinking, why would he have consequences from this? What would be? And I was realizing, it's because he was forcing his realities. He knew how to force things into his reality. Like, he can make anything happen for himself. It didn't matter. It literally didn't matter what it was. I mean, I watched the guy do anything he wanted. It was crazy, And other people would ask me, does he just think he can do anything he wants? I was like, what do you mean think? He doesn't think he can do anything he wants. He does whatever he wants. Like, anything he wants. It was just even it got to me to the point where, I don't even know why I'm going this deep into this, but it even got to the point where even county around here, the county sheriff was just like, man, we have never seen anybody who could skirt the law as closely as this dude and still not get in trouble. Like, never seen anything like it. That's how he operated. He knew what he could do and never had any limitations. The world was nothing but 100% abundance to this guy. And even to this day, it's still the case, right? I learned a lot from that guy. I also learned what not to do because he did. He had a lot of people who would be angry with him too. He had an abundance of people who were angry with him. There was nothing that he did not have an abundance of. You know, frustrations, anger, like all he had an abundance of everything. You know? Thank you so much. Mandates are mandatory for another 20. Your thoughts on the SCH Movid? Don't care if you got jabbed or not. Oh, we're talking about COVID? Just your thoughts about how it played with the economy, money, and how it made politics just look like human monkeys wearing stupid clothes and shouting words. Yeah, without COVID, this never would have worked. The whole thing, right? Because what COVID did in the whole point of COVID, at least from my point of view, when it came to the manipulation that was caused from it, like all the stuff, like there's people out there who could write books about everything in the government, manipulation, propaganda, like all the crap that went down during that time. But ultimately, in my belief, it was about severing the supply chain and issuing out stimulus checks. It was about finding inflation. And that was the only way they could really actually make that happen, is that the money printer wasn't going to do it alone. And I don't care what anybody says, quantitative easing, 1, 2, 3, and 4 failed to produce the inflation that people would anticipate all the money printing doing. The Fed could not find it, right? That was their major problem. And I had to come to accept that, considering I dumped every dime I had in silver, believing that we were going into a hyperinflation scenario because of all the money printing of quantitative easing 1, 2, 3, and 4. So I had to learn something different. And now, again, like, what did COVID do? COVID severed the supply chain because they told everybody to go home. And because everybody was at home, they got a stimulus check. That wiped out inventory, and it left very little room for new inventory to be brought back in. With that supply gap taking place, the supply and demand imbalances were very difficult to cure. And as long as you have those supply demand imbalances being unhealthy, then you're going to have inflation that's going to occur from that. And in fact, we knew that inflation was going to be persistent going into the future, and that the Federal Reserve was going to keep inflation or keep the interest rates elevated, because way back in the day, when they first, said that they were going to expect inflation to come down because they were hoping from help from the supply side. And I stood up right then and I said, that's BS. You are not. You cannot possibly think that. That is wrong. Right? Because there is no way in the world that the supply side is going to come back to help bring inflation down if the consumer is going to be damaged. Like, supply side would be like, go get bent, bro. Right? We are not putting our time, our effort, our energy, our talents, our money into the idea of providing you products and services when the consumer is going to get damaged. That is not something that they are going to do, and inflation was going to be running persistent. I said that a long time ago. And that's exactly what ended up happening. Like, it took a lot longer for inflation to come down because the supply was not as helpful as they had hoped. I wonder why. I mean, it's not like those guys believed that. Not when they said it back then. If the uneducated economist can step up and say that is BS, then you know that one of the 150 economists at the Federal Reserve was going, dude, come on, man. You actually believe that? You actually believe that you're going to get help from the supply side? That's not going to happen. Right? I mean, you do realize that. I mean, there had to have been at least one economist out there who was going to say that. Not just the uneducated economist. I mean, I guess they could have been watching my channel, and then they could have been, much more well informed about how the supply side wasn't going to come back and help them with their inflation scenario. But I don't think that they needed to watch the uneducated economist for that. I'm sure that one of their little intelligent people there could probably have figured that out. Right? I mean, it's just like again, it's just like that was propaganda within itself, right? Saying, oh yeah, we're going to see inflation come down after we get help from the supply side. You think they believe it? Like, yeah, they believed it. Shit, All right, moving on. Hey, Douglas, thank you so much for the $5. Thank you guys for all these super chats, man. We're up to $107 in super chats. This is amazing. All right, Douglas, thank you so much for the $5. Your friends, family, associated get it or disrespect you? No, I don't look at it as a disrespect thing, because you have to think, man, everybody is operating from the consciousness that they are at, from the level of consciousness that they're at, no matter what it is. Even people who live toxic lives, or or toxic relationships or whatever, that's their shit, man. I mean, it sucks, right? Because we understand things a little differently, but that's the level of consciousness that they're operating at, and you can't get mad at them for it. I mean, you have to. The only thing you can do is forgive them, right? It was just like, man, and I mean, I don't feel sorry for people like that, but I do forgive them. It was just like, dude, okay, wait a minute, Brian, get away from me. I can't deal with that, right? You have to set up the boundaries or whatever, and it's just like, man, I can't handle any of this stuff, and I don't blame them or get mad at it, because that's the level of consciousness that they're operating at. I mean, it sucks for them, you know, and that's just the way it is. And so I don't, like, if people say, dude, you're dead wrong, you don't make any sense, you're stupid or whatever, and I'll be like, no, I'm not, but that's okay. I got 137,000 people who don't think that, so not your problem. Thank you so much for the $4.99. Manifesting $4.99 YouTube fee. Proof magic. Magic there. Thank you so much, man. I appreciate it. All right, let's go down here. Rate cut now really won't have an impact. Seriously? No? Rate cut now really won't have an impact. Well, no, because rate cuts really don't have an impact for 6 months to a year. And in fact, in order for it to really be impactful for 6 months, in 6 months, you would have to have a lot of forward guidance saying, like, hey, at the next meeting, we are going to cut anywhere from a quarter to 75, to 0.75% or something like that. Putting out that sort of forward guidance will then have, and I mean, if the adjustment of interest rates will have an immediate impact on the markets, but that's not the economy. That's the difference, right? So, like, a lot of people are looking at the markets and thinking that's the economy. That's not it, right? The economy is the decisions that you and I make, the investments that we make, the things that, businesses we start, the things that we do with our lives, right? Those major decisions that we make. And that really takes 6 months to a year down the road. And really, it's a year before we start seeing the full impact from it. So even if you were to drop rates right now, 6 months down the road is when you're going to start seeing the impact from that. And a year down the road is when it starts to really fully impact the economy. A year to a year and a half even. Yeah. So it does impact the economy, just not now, later. It takes advantage of inflation and buy as many balloons available at the Dollar General. What are you saying? Dollar General collapsed. Mouse Utopia. Yeah. But Mouse Utopia, have you guys ever watched that video? That's an interesting one. Better not have, Steve. I have position. Rip Red Lobster. Yeah, I hear Red Lobster is getting hit. All right. DG will be a staple for lower to lower middle spenders. I think that's why Walmart did a stock split. Rest in peace, cheap rent. Yeah. And see, that's another thing, like why we're seeing so persistently high inflation, is a lot of it has to do with the housing services like rent. Right? Rent's keeping that inflation or keeping the inflation elevated, and not a lot of people are expecting that to come down. So that's also keeping the inflation expectation elevated. All right, I think housing will double. Oh God, who can afford it? I have no clue. ETF approvals are bad for Trump. Rates going higher or lower? I don't know. I mean, I don't know if that's going to be going up or down, but I mean, it doesn't really make any difference anyway, because that's not part of the monetary policy tool. It's the talking about it. You got to remember that. It's just like, even the question of asking where a rate's going to go and when is that going to happen doesn't matter. It literally doesn't matter for the monetary policy, because that's not it. It's the talking about it. Right? I mean, eventually at some point there will have to be a cut, because you have to keep you have to keep that credibility. But again, it's just like 6 months to a year down the road, even if you were to cut a quarter point, people would be super pumped up about it. They would be excited. They would see the Federal Reserve has moved, but it would have probably very little impact, real impact on the economy as far as what the Fed funds rates does to the broader economy. The idea of it will have a huge impact to the economy, especially the way they, put out the information. Like if people believe that this is the beginning of a series of rate cuts, oh man, that would that would drive the economy like you wouldn't believe. Remember, it's like we covered this in a speech. I don't know if, yeah, I guess you probably weren't. It's a members only speech. So yeah, Daniel's not a member, but we did a members only speech talking about this very thing. And who was it? Jefferson. Jefferson, who had said that he was quoting other central bankers out there who were talking about the communications that they are giving to the economy and how much the communications matter. In fact, it's the only thing that matters. Right? This is what they have said. They've learned that even in normal times, their communication is more effective at guiding the markets than their actual adjustment of interest rates. This is like crazy to think about, but it is. This is the way it is. It's not a matter of the actual adjustment of interest rates, it's the talking of it. And it's so hard for especially if you've been following the economy for any length of time, because everything that you have ever built on, everything that you have understand is always about the adjustment of the rates, where do they go? And then that starts to starts to twist and turn the wheels of your ideas of how the economy is functioning, but it's no longer that tool. That doesn't work. It's not part of it. So you have to build a whole new way of thinking about how the economy works by the communications of the Federal Reserve. Don't fight the Fed. Well, at this case, I wouldn't believe anything outside of the speeches themselves. Anything, if it does not come directly from the Federal Reserve itself, I would have a very tough time believing it. Even the words that the Federal Reserve governors and presidents are using, if it is being used on a mainstream corporate media platform, I wouldn't trust it. It would be propaganda. That would be part of the monetary policy tool for guiding the markets through their words, right? I would go directly to the Federal Reserve, get whatever source you can from them, right? Because they are not in a lot of their speeches and stuff. And I can see where some of it is propagandized, but mostly all of it is information that they are giving to the other bankers out there, not to the public. That's how I was able to find this average inflation rate over time. It's how I was able to find that there is no mathematical formula for figuring out inflation. This is how I was able to find all these things, is because I wasn't going to sources that were not the Federal Reserve. I was going to the Federal Reserve itself. And then once I found these things, I'm like, I'm going to use this information against you guys. All right? Because I can see that you're not talking the same. You're you say these words to each other, but then you go out on the mainstream media and you say something completely different, right? Or at least give the impression, right? Allow the perception of the people to take in this idea of what it is you're doing that's not what it is you're doing, right? And having recognized that is just oh, okay. Now I understand it. It's about the communications. It's not about the adjustment of interest rates. See, the adjustment of interest rates was way back in the day when they didn't tell you. You just wake up one morning and then bam, interest rates are adjusted. And you're like, holy shit, what happened? Right? That's how the Federal Reserve operated. And then they realized, man, if we do this communication thing, we can actually enhance these adjustments, these interest rate adjustments. And in fact, if we can use communications well, we could actually use it during the lower bound of zero when the Fed funds rate is no longer an effective tool. And during the times of figuring it out, from the times they never said anything to you about the Fed funds rate, you would just wake up and they would be adjusted one day, to now they have all this communication that they put out there. They figured out all the little tools that they needed, right? One of those things was that plot map, that dot plot, which was a communication tool. It was literally a communication tool to guide the markets, right? It wasn't something that the Fed ever had before. They all sat around one day. They were all like, man, how is it that we can use something to try and bring some of this forward guidance idea without actually giving them forward guidance? We can just kind of trick them into believing? What is it that we could have out there? What kind of tools could we use? Well, we could come up with something like this this dot plot thing, where we just like tell them, based on current ideas, this is where we feel that the interest rate should be in the future, but not like set it in stone. We can just put it out there and just, let the information, go out there to the public, and they can see that and not be committed to it. And that was their monetary policy. That's that's one of their tools. And they used it last year, and it was too effective. It worked too good, right? They put that out there, and everybody was just like, holy crap, there's going to be a half a dozen interest rate cuts. Go buy a house right now because we can refinance in the future. Blam! They all ran out there and started behaving as if it happened. Guaranteed. Like, I don't know how many people I was just like, listening to the guaranteed rate cuts coming this year, and I laughed so hard about that. Again, positioning themselves with a strategy that is absolutely incorrect. I never once ever failed for it. I mean, from day one, as soon as that plot, like, people were like, interest rate cuts. And I'm like, what the hell are you guys talking about? And they were like, no, they said it. It's all over the place. The Federal Reserve is already committed to it. And I'm like, what? What are you talking about? I didn't see that. And they're like, yeah, look, the plot map, this dot plot. And I'm like, that thing? You're not trusting that, are you? Yeah. Like, they didn't understand. They're like, of course we are. Why wouldn't you? It was like, okay, good luck with that, all right? Here we go. We got north-south with the $1.99. Amazing. Savers want higher interest rates. Yeah, absolutely they do. I mean, absolutely. Savers, producers and savers are what build a strong economy. No doubt about it, right? Producers and savers is what brings stability, right? Producers and savers is why we had such a good economy that provided one income for the household, for the entire, family, car, vacations, college, all the other stuff, right? Producers and savers are the backbone, right? However, they have a run rate. There's a run rate. That's all there is to it, right? There's a run rate to it. And the moment that you try to control the inevitability of it, you are going to find either one, communistic type rule, right? Socialistic type things to prevent people from diving into the luxuries and expanding and doing all the other stuff that would then create the situation in which that the domestic manufacturing would leave and the foreign production starts coming in, right? So there's a run rate to it. When the people are working hard, producing and doing well, it's awesome, man. We can do great. But once it moves beyond that, it's not going to work anymore. Right? You can't do it that same way. And the only way to make it work or to have that same sort of life is to revert back, which means that no more luxuries, right? No more higher standard of living. That means working twice as hard for less to pay off the debt and not move into anything that's beautiful or wonderful, right? And you do that for generations because it took generations to get here. This is like, it's sad. Like, I mean, I don't like it to be that way. I don't wish it to be that way. I'm not planning for it to be that way. It just is. It just is that way. And that's easier for you to now be in a position in which that you can deal with the facts. Okay? As a saver, I want interest rates to change when I'm buying another car or house. Depends on how much and if the dips back into light dropping and coking. All right, good call, Benny. Well typed. Good all-nighter. Isn't the standard of living dropping right now? Well, I don't know. By whose standards, right? I mean, I think about, like, what is wealth? Food, conveniences, and pleasures of life. Now, a standard of living, I guess, could be a matter of opinion. Right? I mean, what's the standard of living? You have a certain income, or you live in a house, and you have a new car, and you have this particular year car, or whatever. Like, a standard of living is more of a general standard that people have that's a matter of opinion. That's it. Right? And so when, you think about it, like, is the standard of living dropping? Well, is it really something that is now less convenience? There's less food. There's less pleasures of life. Like, is that the situation that we're in? Even like I see homeless people carrying cell phones and drinking beer and using EBT cards and stuff. They got food and they got a convenience. A cell phone ain't great, but it's some sort of convenience, right? They got their beer. Like, these people have wealth and they're homeless. Like, I mean, don't get me wrong. I'm not saying that that's some sort of awesome life. That's great, because I know and seen with my own eyes some people who really live poor, right? And like, I see the way that some people live poor around here, and this ain't poor, because you could go to some parts in this world and there's some people who are really living poor. They don't have no cell phone. They certainly ain't got no beer, right? So I think about that. Like, here in this nation, when you say, like, is the standard of living going down? Well, yeah, I guess. I mean, comparatively in a lot of ways, but the food, conveniences, and pleasures of life seem to be running in abundance, right? Yeah. We're an incredibly wealthy nation, like stupidly wealthy. We shouldn't have this much wealth. The only reason why we do is because we have been selling so much debt. If you produce nothing, right, and then import the production of everybody else around the world, then you're going to have a pretty high standard of living. I don't care what position in the world like, where you live, right? Like, if you're living homeless, you're living as a wealthy homeless person comparatively to the homeless people of other nations. And that's sad to think, right? But that's the case. And again, it's just like, I just look at it for the reality of the situation. The question is, when did the economy become largely financialized? I think that would probably end up, I'm going to have to say it was probably somewhere during the Industrial Revolution. Because you have to think, when we were exporting stuff and importing gold, other nations were wanting to do transactions with each other, right? And they were wanting to do it with gold, but we were taking a lot of the gold. However, we were also issuing out a lot of dollars, right? So as those dollars were moving out to the rest of the world, and the rest of the world was going, well, we like using gold, but those dollars are pretty convenient. Like, I mean, super convenient, right? It was just like easy to do transactions. Everybody's accepting of it. I mean, for the most part, we're all believing that if we have a certain amount of dollars, we'll get a fixed amount of gold. So yeah, that kind of works. Let's use these dollars. Like, they got a demand for dollars. Well, with that demand for dollars came in was the debt, right? So we knew that if we had issued exactly the amount of dollars for the amount of gold that we had, there wouldn't have been a problem. But that's not what we had a problem. Why? Because we issued out the debt. So that, to me, is probably where the biggest shifting point would have happened, is when the world started demanding dollars to do transactions, and we started to accommodate that. Now, if we didn't accommodate it, what was going to end up happening is that they were going to slow down on their purchases. They wouldn't have been able to get as much stuff from us because we already had all their gold, right? They were like, hey, you want to buy some stuff? And it'd be like, yeah. And it'd be like, but I ain't got no gold. And they're like, oh, sorry, how about you? No, you're out of gold too. Why don't you guys have any gold? Oh, we got it all. Right, oops. So that must suck for you guys, huh? Because you're not doing anything as far as transactions. That bites. Okay. What do we do? Give up all our gold, or figure out a way to, like, allow transactions to take place? Like, I don't even think they were figuring it out. I think they were, like, just looking at it going, wow, those dollars are really getting used, aren't they? Oh, man. I mean, well, we could be giving up all our gold, or we can just make sure that they have plenty of dollars. That's probably what happened, right? They're like, how do we get that? Well, issue out a bunch of debt, yeah? And so, to me, that's when it really took off. Emily Lee, thank you so much for the $2. I can't wait to move out of the U.S. when I retire. Where are you going to go? Emily Lee, couldn't you do the opposite? Retire by moving out? There you go. Saving rates are still too low, in my opinion. 4%, not enough to keep up with inflation. All right, you should go on Meet Kevin show. Yeah, I've emailed Meet Kevin. we didn't quite get any kind of correspondence, set up or anything like that. But I'm pretty sure he knows who I am and I know who he is. So it would be cool to do a conversation with him. I would love to share these theories. Like I'm like I said, the average inflation rate thing. I thought for sure like everybody would know about this by now. Like when I found it, I'm like, okay, well, it won't be too long, and then it'll be just common knowledge. Everybody will be talking about it, and then the Fed will have to figure out something else. But no, that's not what happened. Like slammed a big lid on that thing and said, do not talk about average inflation rate over time. And whatever you do, just make sure that you say it's a 2% goal and 2% over time and 2%, whatever, but do not use the 2% target, all right? Because that's not what's going on here. Even though you can hear them talk in such a way that it does sound like they're going for a 2% target. But you also have to think, like, the way that they are phrasing it, are they saying a 2% target or a 2% like over time, like achieving their 2% goal, right? Because a lot of times you might hear like the interviewer, right, the person who's like asking the questions, they may like, when are you when do you expect to get to the target? It's just like, well, we expect to get to our 2% goal over time, and people will hear that and think target, right? Or they, will assume that they'll get there within whatever. It's very clever the way that they communicate it out there because they allow it to be seemingly a target through their communications with the corporate media. Like they do that on purpose. It's meant to do that. I think you'd do better on Nobody's Special Finance. Yeah, I met. Yeah, we've met. Very similar styles, yeah. I think Mickey is just a modern day infomercial guy. That's a little bit of what I got from him too. Neutral inflation versus average versus others. Well, I've never really heard of neutral inflation, but I guess that would be like where the inflation rate is neither accommodating nor restricting the economy. I'm not sure what that neutral inflation would be. Like, to me, neutral inflation would be zero. Average inflation rate is when you have times in which that inflation is running persistently below 2%. Then you would have to have times when it runs moderately above 2% for some time. So it creates an average of 2% over the long run. That's what the Federal Reserve is going for. Most of the time, they were going for a 2% target, meaning that if they were not at a 2% inflation rate, if they were above it, they would adjust monetary policy to achieve the 2% goal. If they were below 2%, again, they would adjust monetary policy to try and achieve the 2% goal, leaving the 2% target, leaving bygones be bygones, meaning that they just like whatever happened, like if they had run persistently below 2%, they wouldn't care. They were just going for a 2% target, and they failed. They couldn't do it. It was a terrible idea. Terrible idea. All right. We sat next to Jack Gamble in Vegas last November. Yeah, we did. Jack is cool as hell, too. I mean, when will you go on Meet Kevin? Oh, I have no idea. I haven't talked to him. Let's see here. Correct. Meet Kevin was trying to build a $100 million syndicate of house hacking. He would run. It's all good. He's just literally using media as commercials. Even Grant Cardone sounds more credible than the infomercial. Interest rates are dropping. Gold and silver is now king. Interest rates are dropping. All right. Let's just be glad his name is Meet Kevin and not Kevin's Meat. What would your thinking process be to identify the markets that are in early stages of development before the rush into luxuries? I don't know. I mean, I guess like look at all the places that are getting manufacturers. Right? Vietnam, Malaysia, Mexico, these are the places that are getting, like, where are the manufacturers moving to? They're going to move to the most efficient, like, you can't just, like, okay, so a manufacturer is just like, yeah, well, the labor is really cheap in this, African country over here or something like that. Yeah, but they don't have the infrastructure to deal with manufacturing, right? So you got to have some sort of manufacturing infrastructure to handle manufacturers, right? So you can all of a sudden manufacturers are like, man, I want to take advantage of this cheap labor, and they're like, well, yeah, but we don't have the power to deal with you guys. Like, we don't simply just don't have the power, like we don't have enough electricity here, or we don't have the highways, or we don't have the ports, or we don't have any of the facilities or commodities or anything else to deal with what it is that you are asking for, like, fuel and whatever. I mean, it's just like there's got to be an infrastructure there for it. So there's only going to be a limited amount of places that can actually fit the bill of being a manufacturer to create the move into, like, expanding the higher standard of living and stuff like that. So there's only going to be a few places. So just look to the obvious ones that are already doing it. It's Malaysia, Vietnam, Mexico, and then I imagine, like, there's places in India, and I only assume that there's probably going to be other ones out there that are not as popular, but are going to be doing just as well. So yeah, do your research on it. 2.0 moving average, you mean with some unknown look back window? Yeah, like, here, let me see if I can find it here. It might be in here. What is this? This is, where is that thing? Oh, well. I got so many. Oh, here we go. Richmond, is that it? Yeah, here we go. Okay, I found it. All right, so this is how the Federal Reserve describes how they find average inflation over time. Okay, so we covered, like, Jerome Powell's speech, and then we reiterated Jerome Powell's speech with Bowman's speech given just a month and a half ago. We know that they are going for an inflation that is moderately above 2% for some time. We don't know how long, right? But we don't know what average inflation rate is over time. Jerome Powell says they don't have a mathematical formula for it. So this is the closest that I can find that describes how it is that they are seeing the average inflation. In its update, the FOMC did not define the window of time over which it would be looking back to assess progress towards its goal. By looking back far enough, it is possible to identify starting dates where average inflation through the present day has come in exactly at target, right? So if you look back far enough, like, we can't go back a year because that's not going to find a 2% average. We can't go back 2 years. That's not going to do it. 3 years still doesn't do it. 4 years can't find an average inflation rate of 2%. However, as of the writing of this thing, from October of 2008 through August of 2023, right, because this thing is a little older, headline PCE inflation averaged 2%, right on target. So you see that? They look back in time to find out how far back averaging inflation until they find the 2%. At the time, it was October of 2008. The longer inflation stays elevated, the closer that timeline gets to us. You see? Like, they don't go on to explain this part of it. This is what I've figured out. And that if that timeline starts moving closer to us, eventually it's going to find an inflection point where it can't get any closer to the current moment. At that moment, right there, if inflation happens to be at 2%, when it meets this inflection point of 2%, meaning you can't find any time closer to that current moment where you can find an average of 2%, the Fed could then switch from backward-looking average inflation, which this is, what they describe as backward-looking average inflation, to forward-looking average inflation, and a whole new monetary policy would be set up, right? As of right now, it's backward-looking average inflation. However, come the beginning of the year, they're going to do a monetary policy review, right, on how it is that they do this. They may change the average, may go back to a target, they may change the target, they may do something whole completely different. But that doesn't happen. That review doesn't happen until the end of the year, the beginning of next year. Right? That's when that takes place. However, if they happen to be at a 2% inflation at that time, right, when this inflection point happens and they switch over to forward-looking average inflation, and I think that's what's really going to happen. And they won't go back to a target because they failed. They failed the target. They can't do it. Okay? Alrighty, guys, it's been 2 hours. It's been a lot of fun out here. It's 7:22 in the PM out here in the Pacific Coast. All right, I'm still confused. How does the timeline get closer? Okay, so the longer inflation stays elevated, right? Like, okay, let me see if I can, because of all the past deviations from the 2% target, the Federal Reserve has to make up for that, meaning that inflation has to carry on for longer periods of time, right? So now, if you went back to, say, 2020, right, and you were to like, okay, I need to find an average of 2%, you would have had to gone so far back in time to find an average of 2%. Like, you wouldn't have had any time since 2007. Like, that's when inflation, or like the inflation scenario, was switched. When did they switch it? In 2012, they switched to the target, right? So basically, since 2012, they failed to achieve it, right? So all the time, if you were at 2020, right, looking back, 2019, 18, 17, 16, none of this time you were able to have a 2% average. In fact, you would have to go all the way back into, like, the 90s probably to find well, maybe not that far back, but you would have to go back to the early 2000s to find an average inflation rate of 2%. But then in 2020, right, the inflation started to kick in. Well, now you don't have to go far as back to find the average of 2%. Right? Because of all the 2% failure to get the 2%, the recent incorporated of average of 1 or whatever above the typical inflation of 2% target would start bringing that timeline ever closer. Right? You get that? Like, the higher inflation goes, the quicker that timeline comes up to us. We should have a graph for this. In fact, I think I did a graph for this. Didn't I do this one time? I did do this with the graph. Yeah. Wait a minute. Is it here? Remember that one, guys? Remember that one? I don't even know how to tell that story anymore. That was the Cantillon effect. That was the Cantillon effect working right there. And let me see. I can't remember. Some of these are just wild. Look at this one. I don't even remember what the hell I was trying to say with that one. You guys remember that one? These are videos. I did these charts and did videos. I don't even remember what the hell I was trying to explain here. That's so funny. No, I can't find it. Yeah, sorry guys. Anyway. Bill W., inflation is never going down. I think he's saying that if you change your timeline, average inflation obviously changes. So if it's shorter, then the goals can change as well. The only way to beat inflation is through homestead and prepping. I wish I had a Cantillon effect in my karaoke machine. Alright. Well, guys, let's call it quits. We're an hour and 59 minutes into this, so 2-hour live stream. That's good enough for this afternoon. Thank you guys for being here. We got 98 people watching right now with 132 likes. I love it when I see so many likes here with or more likes than we got actual viewers watching. $111.28 in super chats. You guys are just amazing. Thank you so much for all the donations and support to the channel and everything you do. I'm really hoping this information is being useful, right? I hope you guys are able to see through the propaganda, through all the other economists out there who are just missing it, who have misguided their strategies, and all the people who are listening to them, putting this information out for, for you guys to decide for yourself. I don't know if I can explain it any more than I have, but I'm going to keep coming out and just keep talking about it until it becomes, either common knowledge or we become millionaires off the information. I don't know how else to look at it, but I just got to keep going with it. You know what I'm saying? And I appreciate you all being here. I appreciate all the conversations we have, all the comments and questions and everything that we do. So, all right, Uneducated Economist, you guys let me know.